Hello, this is Patrick. Welcome to Chart Built Wealth, profitable investing with technical analysis. Well, I'm giving you another buy recommendation on fixed income. And I think the approach that I've had has been the right approach. We've had some good trades on TLT, the 20-year treasury, and other fixed income. We've gotten out of fixed income when we should have, as prices have gone lower and interest rates have gone higher. I think that's going to change, at least for a few months. And so, with that, let's get into it. I'm actually going to change this so you can see where we've been. So, this is TLT. And TLT. So, here's where we got involved in TLT back in March of last year. And here's where we sold at higher prices. We collected dividends during that time. I tried to buy back in a little bit lower than where we got out. Prices went down. I got stopped out, and now I'm getting back in. TLT is not my recommendation tonight. I'm just showing you this to give you a point of reference on what the tactical approach has provided. And I think it's given us some added value. I'm not recommending TLT because we don't have a pattern intact. We have a pattern developing, an inverse head and shoulders pattern. We have a left shoulder, the bottom of the head, and the right shoulder possibly. This is only possibly. It could be the right shoulder developing. And if we see some more development here, I will go to a buy on TLT. I've been buying small amounts of TLT, but I'm not ready to make a big recommendation or a build a big position at this point in time. What I am ready to make a recommendation on is IEF. So instead of TLT, the 20-year longer term treasuries, which are more volatile and have more interest rate risk, I'm suggesting the 7 to 10 year maturities. IEF is the iShares ETF for that. And it has an inverse head and shoulders pattern that's already intact, and it has been intact. So, we got a big breakout and then we got a big retracement. And now we're right on a confluence of moving averages. So, um, I am going to jump ahead here a little bit and give a buy recommendation before we break through. But I got my stop down at 91. So we have I don't know, a 2.5% potential loss on the downside. On the upside, we have a 103 price projection, which is close to 11% potential return and a 3.60 dividend yield. So this is my recommendation. I think it's timely. Let's take a look at the point and figure chart. You can see we have our bullish trend line in place, which we don't have on TLT. We have a bearish trend line. And we also have a bullish price projection of 113, which is the same that we had on my more subjective chart that I just showed you. So we're getting some confirmation here, and I like that. So IEF is a recommendation. And so I got an interesting comment today on the recommendations for the week last night, and the comment was, I can't buy commodities, I can't buy gold, I can't buy silver, I can't buy copper. And so when I see those things, what do I do with my 401k or something that you can't short? You can't short the S&P 500. How do I use what you're telling me to my advantage in a limited account that probably has stocks, ETFs, index funds, and and fixed income options. How do I work that? Well, I'm just going to briefly comment on that, even though it kind of muddles my recommendation here. On the S&P 500 short, when you see me recommend that, you want to take your gross exposure down to equities. So if you have 75% in equities and you're a moderate investor, but you're long term and you're okay with some volatility, maybe you take that down to 50%. Um, that's up to you, but that's how I would use that S&P 500 short recommendation. It's up to your risk tolerance and all those good things. With fixed income, if you had nothing in fixed income and you had everything in stocks, you definitely want to add some fixed income here. Oh, one other thing on the S&P 500 short, if you didn't do that yesterday, you certainly, and the market's down tomorrow morning, you don't want to take your equities down to 50%. I mean, after the market falls 2 or 3%. If the market's up in the morning, you might want to sell a little bit of equities. But, I always like to sell into strength and I like to buy on weakness. So I'm hoping, putting that back on fixed income, I'm hoping IEF is down tomorrow. If it's down tomorrow, to give me a good buying opportunity, and I will be buying IEF. So we have the inverse head and shoulders intact. We have the point and figure chart intact with a bullish trend line and the same price projection. So I like all that. And I thought I would give you one other alternative. Um, Talked about TLT. It is shaping up, but it's not there yet. And because it's not a for sure thing, and I don't have a good reward to risk at this point in time, I'm suggesting the less volatile 7 to 10 year IEF. But for other cash that you have, let's say you took down your gross exposure in equities and you have, 20% in cash or 25% in cash, and you don't want to go out and put 25% in IEF tomorrow. You want to maybe put 10% in one day. And then, the next time it's down, you want to add another 10%. You kind of want to do it in increments. And for the money that you have left over, a good alternative, and I've mentioned it before, is this ETF, the US Treasury 3 month ETF T-bill, TBIL. This is an ultra short maturity, so uh, the price is pretty. I don't want to say it, you can't lose on it because you can, but you can see that this is up maybe 2% in the last 5 months. But what I like about T-bill is the yield is currently 5.23%, and that's really for almost a risk-free investment. So, here you got the 7 to 10 year Treasury IEF that's paying a three, whatever I said, a 3.26, and you have interest rate risk because those are 7 to 10 year Treasuries you're buying, and on T-bill they're 3 months Treasuries, so they're much shorter maturity and much less volatility, and you're getting 5.23. So for cash that you got, and if you're a little nervous about things like I am, you might want to put some money in T-bill, TBIL. Just another suggestion for you. So the big call today is to buy fixed income. I'm favoring the middle of the curve, the 7 to 10 year maturities, IEF. I think it'll give you exposure. It'll help cement your portfolio. If the market were to go down a lot more, I think it's going to go down for a few more days, and not every day, but I think we got, uh, the direction should be down. Something like IEF and T-bill will give you some positive returns and will help mitigate the volatility in your portfolio. So I hope you found it helpful and interesting. Thank you for watching Chart Built Wealth, Profitable Investing with Technical Analysis. Please like and subscribe. Thank you.